Hello class, welcome to part 3 video for your chapter 6. And in this video, we are going to discuss what is internal control. Internal control are the system and procedures that are implemented by the management with the objectivity of safeguarding the assets of the company, prevent and detecting fraud and error in the system. The aims of the internal control in financial accounting include the following. All the income and revenue of the company should be recorded accurately and in correct accounting period. All expenses is properly authorized and accurately recorded in correct accounting period. All assets are properly recorded and with proper safeguard. All the liabilities are properly recorded and provision is made for foreseeable losses. Financial statement of company is reliable. And lastly, fraud and error can be identified and addressed on timely basis. So this is the objectivity, or we can say the aim of internal controls. Example of control account, and we have learned this as receivables, payables control, and later on we are going to show you how to prepare bank reconciliation statement. And for the trial balance, we have covered this in our FI1. Bank reconciliation statement. Bank reconciliation is an important control to identify the difference between the transaction in your ledger and bank statement. Reason of difference could be omitted transaction or error in record in GL, and vice versa. In addition, timing difference in the recognition of payment and collection is another factor that makes the general ledger and bank statement difference. Sample bank reconciliation statement. So for bank reconciliation statement, we will start from the balance as per bank statement. So this is the amount from bank statement, and we will add uncredited check. Uncredited check refer to the received but not yet cleared by the bank. And some adjustment on the error in bank statement. We will less the unpresented check, which is check issued but not yet cleared by bank. And also adjustment on the errors in bank statement, and we get balance as per general ledger. So why we have a situation where received but not yet cleared by bank and check issue not yet cleared by bank? So for explaining this, we can use a diagram. So for example, your company is using, for example, Maybank account, and the accounting period for the company, we assume that is from 1st January to 31st December. So on this date, 30th, you make a payment to your supplier. For example, 10,000 by check. 10,000 by check. So when you make payment to your supplier 10,000 by check, of course you will record in your accounting system, right? So in your GL, you will show that I have a credit bank 10,000. But do your supplier, this is your supplier. Your supplier using public blank account, but he only received this payment on 2nd of January. 2nd of January. So make it clear, it's December. 2nd of January next year. Why? Only received here. Why the supplier only receive on this date? Because normally when you have a different bank for check payment, you have 3 floating days. So in the bank statement, of your company, the bank statement of your company will show that you make a payment on 2nd of January, and the amount is 10,000. So can you see the difference? In the accounting record, you mentioned that on 30th December you have credit bank 10,000, but in your bank statement it only show that you make payment clear on 2nd of January. So can you see that there is a different, the timing different between your accounting record and your bank statement? So when you have a timing difference between your accounting record and your bank statement, you need bank reconciliation statement to show the difference. You need the bank reconciliation statement to show the difference. This is not only applied to your payment. To your collection, this will be a similar situation, whereby when your customer give you the check and you already record in your account, but this amount only credited in your bank account 3 days later. So we use bank reconciliation statement to show the difference. So let's have a look on the step in preparing the bank reconciliation statement. The first step, you have to identify the unmatched item in your bank statement and your general ledger. So sample of items appear in bank statement but not in ledgers, such as bank interest, direct credit or debit, dishonor check and error in bank statement. Sample of items appear in your general ledger but not in your bank statement, such as unpresented check, uncredited check and errors in your general ledger. Step 2, you need to revise your general ledger, means your bank account, for the item appear in bank statement but not in your general ledger, and also error in the general ledger. Step 3, you have to prepare the bank reconciliation statement, includes unpresented check, uncredited check and error in the bank statement. So you have to, one thing to take note, in your bank statement the receipt will show as credit and the payment will show as debit. This is very different as our accounting, because in our accounting record we will show debit as a collection, credit as a payment. Why we have such difference? Because the double entry in bank statement are opposite as compared to company's double entry. As such, positive cash balances will show as credit and negative bank balances will show as debit. Why we have a difference in our accounting record and bank statement? Remember, bank statement prepared by who? Bank statement prepared by bank. So the accounting record will use the bank point of view to prepare. Bank statement prepared by bank, so the double entry will be presented by using the bank's point of view. If you deposit cash to the bank, you will debit your bank account. Why? Because you show your bank balances increase. On the other hand, if you deposit, let's say 10,000 to the bank, the amount that bank owing to you increase, because this is your money, not the bank money. That's why they credit. So vice versa, if you withdraw money, you credit your bank account because your bank balances decrease. But from the bank point of view, if you withdraw the money, they have to debit the bank their record. Why? Because this will show that the amount that owing to you become lesser. So bank and company is on a totally different position. That's why in the bank statement you will show a credit as a collection and debit as a payment. So let's try this exercise, classroom exercise 6.11. The following is the bank account of TCP Limited as at 31st December 2020. According to the bank statement as at 31st December 2020, it shows that the bank balances is a credit 982. It means that this is a positive balance. During the investigation, the accountant has identified the following items that cause the general ledger and bank statement cannot be tallied. So we have bank charges and so on. So based on the above information, you have to prepare revised bank account and bank reconciliation statement. So the account is provided here. If you print out your textbook, you can draw here. So for a better presentation, I will use Excel to present my answer. So we back to here. the first step is you identify the unmatched item in your bank statement and your general ledger. So here already provided to you what is the difference between them. Next, you have to prepare a revised general ledger. Your revised general ledger will help you to record those transactions which is in your bank statement but not in your ledger, or when you have an error in your ledger. So we need a revised bank statement. So revised bank statement show here. We have a balance brought down. The balance brought down, we use the figure here, 3057. Next, we look at the additional information to see whether this require adjustment in the bank reconciliation or in the revised bank account. Bank charges 40 show in the bank statement but not recorded in the cash book. So it means that this is an omission in your GL, right? So we have to record this. So bank charges is on the credit because this will reduce your bank balances. Next, a check 125 paid to supplier has been recorded as received. It means that there is one entry which we have to record as 125 in your credit, but we accidentally record as 125 on the debit. I repeat, this second information say that by right, when we pay to our supplier, we have to record on the credit side 125, but we accidentally record as a receipt. So if I want to rectify this 125 and make a correct entry on the payment, how do I adjust? The answer is I record 250 on the correct side. Why? Because this 250 we can split into two portions. The first portion is to net off the wrong entry at your debit side. The second portion, 125, is used to record the correct entry. I repeat, the first 125 in your credit is used to net off the wrong transaction in your debit side. So this being net off. The second 125 is used to record the correct transaction, which is a payment of 125. So we have to write 250, and this will be payment to supplier. Next, a check 180 has been returned by bank due to insufficient bank balances in your customer bank account. It means that this also need to adjust in your GL, right? The second one also adjust in the GL. It means that we have record 180 on the debit originally to show the collection, but this collection has been rejected by bank because your customer has no enough balances. So how do I eliminate this 180? The correct answer is we write a 180 here on the credit side, so to net off the impact that we record previously, the 180 on the debit side. Next, total payment to supplier 285 has not been clear in the bank statement, so this one we record in bank reconciliation. And for payment unclear, we call unpresented check. Total received from customer 1260 has not been credited in the bank account. It means that this has been recorded in our GL but not in the bank statement, so we have to show it in our bank reconciliation under the category of uncredited check. Uncredited check means we have received the money from the customer, but this amount not yet reflected in the bank statement. So we circle these two. When we prepare the bank reconciliation, we know wish to record. Next one, a payment to supplier 1920 has been recorded as 1290. So first of all, we have to identify which one is the correct entry. The correct entry should be 1920, right? And the 1290 is wrong one. However, the original entry, when they record 1290. So how to rectify this problem? In order to rectify this problem, we can use this method. We use 1920 minus 1290 to get 630. So what we need to do is we add another 630 here to rectify the error. So we have complete all the transaction. So the next step that we have to do is we do the closing. So total credit 1100, total credit is total debit is 3057. So the balance CD will be 3057 minus 1100, 1957. So the balance BD we put here 1957. So we have complete the revised bank account, and the new balances in your GL will be 1957. The next thing that we have to do is we have to prepare the bank reconciliation statement. So for bank reconciliation statement, we start from balance as per bank statement 982. On credit means this is a positive amount. Next, we have to add uncredited check. Uncredited check amount is 1260. Next, we have to less unpresented check. The value of your unpresented check is 285. So we minus 285 here. So balance as per general ledger, we sum up the amount above. If this amount can match to your bank reconciliation statement amount, it means that your answer is correct. Your answer is correct. So that's all for your home classroom exercise 6.11. And let's continue. We still have a small portion to finish. This section is talking about suspend account. So what is suspend account? Suspend account will be created in two circumstances. The first is when your trial balance is not tally, so that the difference amount will be recorded in your suspend account for further investigation. The second situation is when the accountant is not sure the double entry of the account, so that they will put the unknown entry in the suspend account temporarily. Kindly take note that the suspend account must be clear when you're preparing the financial statement. It is not allowed to maintain the suspend account during the preparation of financial statement. So in a simple words, suspend account can help the accountant when they don't know or they are not sure what are the double entry for a certain transaction, so they can put in the suspend account temporary. But take note, it's only temporary. It's only temporary. Only temporary. You must clear your suspend account when you prepare the financial statement. So let's have a look on the exercise 6.12. Classroom exercise 6.12. TCP Limited has a suspend account amounting to 8590 as at 31st December 2018. As per the investigation, the accountant has found out the errors or error and mistake. So here are the mistake or errors that the accountant find out. Based on the above information, please prepare the journal entry and suspend account to correct the above error and mistake. So let's have a look. So this is classroom exercise 6.12. The first one, fire insurance 3,690 has been recorded as 3,960 in your general ledger. So we can draw a simple fire insurance account. So this is fire insurance account. They record 3,960 here. The correct one. The correct one is 3,690. Alright, this is the correct one and this is the wrong one. So this is the correct one, this is the wrong one. So how we can adjust from the wrong one to the correct one? When your difference is higher, when the wrong one is higher than the correct one, the way you can do is you record the different amount. The different amount we use 3,960 minus 3,690, 270. So you can record 270 here. When you record on the opposite, this will lower down this amount, and you can rectify the wrong amount to the correct one. So the double entry, we debit the fire insurance account Oh, I think I make a mistake. Apologize. The 3,960 should show here. Alright, because bank payment and 3,690. So the difference is 270, right? So we have to record here. So let me adjust again. So the correct answer will be we debit the suspend account by 270 and we credit to the fire insurance account 270. So this is the double entry for the first adjustment. Second adjustment, let's have a look. Bank charges 340 has been recorded as credit entry. So bank charges account by right, I think we make a consistent, we write the correct one on the right hand side. By right, it should be a 340 on the debit because this is an expenses, bank charges. This is the correct one. However, the accountant record wrongly on the credit 340. So how to rectify this issue? In order to rectify this issue, you should double the amount on the debit side so that we can change from a credit balances to a debit balances. So we say that this 680 we split into two portions. The first 340 is used to net off the wrong entry. The second 364 is the rectified entry to make sure that your bank charges will become a debit balances of 340. So double entry, we debit the bank charges account 680 and we credit to suspense account. Next, the next account is regarding the rental income. Rental income 43,000 has been recorded as 34,000. So let's have a look. Rental income. They wrongly record as 34,000 on the credit. This is the wrong one, and the correct one will be 43,000. So how to rectify this issue from 34 to 43? So we find out the difference first. We use the 43 minus 34. We get 9,000 different. So in order to change from 34 to 43, we just need to record 9,000 here. So the total amount will change to 43,000. Double entry. We debit the suspense account and credit to rental income account. So that's all for the journal entry of these 3 items. But we haven't end our question, because in this question they want us to prepare suspense account as well. So we draw a simple suspense account. So this is suspense account. Credit 8590. So the balance BD 8590. So we follow the sequence to record the entry. The first entry is we debit the suspense account. So we write fire insurance here. 270. Next, we credit the suspense account. We write bank charges. 680. Next, the next account is rental income. Is a debit suspense account of 9,000. So we write rental income here on the debit. Next, we have to see whether we can balance the suspense account or not. So the total debit is 9270. Total credit F590 plus another 680. So we get 9270 as well. If your debit can match with credit and no more balance CD and BD in your suspense account, it means that your journal entry is correct. And that's all for your suspense account exercise. For the next question, 6.13, I will discuss with you in the live lesson. So if you have any question regarding the bank reconciliation statement and also the suspense account, you can drop me an email or ask me in the LMS. So that's all for your part 3 video for your chapter 6. Thanks for watching.